Okay, so while I was recording this video, we had a news event about GameStop and the NFT marketplace, and AMC and GameStop are both rising in after hours quite a bit. In fact, this price rise is beginning to break through these downward trend lines from the last couple of days. So bear in mind that this video does not account for this. This could end the vertical rundown and we could see a bullish reversal. We could say, I'm not going to be committed to saying that yet until I see how the markets respond at open. So just remember, I shot this video before the news event and we'll see how it holds up tomorrow. Will it be a nothing burger tomorrow? I don't know. It looks like it will mean something. So bullish reversals on the table. In that case, when you see a rise above $32 to confirm a nice sweet fat double bottom. But until it breaks 32, we're still in a long-term downtrend. So bear that in mind. I am going to be watching this though because this is quite the rise in after hours. I mean, the RSI is going nuts. Let's get this analysis started. I've got 4 charts pulled up here. I want to go through each one and just give a brief summary of what I saw on the 1-minute charts as the day played out. And of course, I'm going to start with AMC. Click up here, maximize sell. Booyah. Okay, what a day. Isn't that an interesting pattern? Doesn't this look familiar? This looks exactly like June to late November, and then this is just uncanny. I see it, but you know, it doesn't mean anything. It really doesn't. Okay. Wow, the day opened and I bought puts right away. I said, you know what? I am not missing this big slide. We are in a vertical run down. The trend is down. Trade the trend, and boom, it paid off. The price started and then fell. Just poof, big landing here at the 2080 mark where we saw that last big bottom. However, the dynamic here is much different because it's occurring intraday. The last time we saw this level, the price had dipped down, and then at the open, a bunch of buy stops probably got triggered, setting the price upward, and that big bullish uptrend ensued. That this bounce occurred during the intraday gives the bears an opportunity to trap that upward momentum and then send the stock lower, and that's what we saw. So there was this big dip, huge dip, and then it started to rise up. And of course, I exited my puts before that trend line crossed right here. So again, I made pretty good money today. It's incredible. I'm just experiencing this dramatic rise in my account, which is good because I think my account dropped something between 70 and 80% after I YOLO'd in November. So I'm trying to recuperate these losses. It's a big deal for me to be able to make this money back. I'm still digging myself out of the hole, but I think that if I can continue to make these percentage gains on the daily, with time, I will eventually have more money than I started with. That's the goal, and it's gonna take me a long time, and I acknowledge that. It's gonna take a lot of patience, Nonetheless, I digress. So big fall and then big up, and the price didn't rise all that high off that jump. It really didn't. In fact, we got kind of trapped up here in this consolidation region that we saw yesterday before the close. So as the price turned down, we started seeing this consolidation happen, and that's what all of these lines are. I have a ton of dashed lines. Let's go through them really quick. Blow this up and move over. Okay, so these green lines are of course uptrends and the red lines are downtrends, and some of them I've labeled. So there's a 3-day downtrend or a 2-day downtrend shown here, and that was broken by the response from that initial dip, okay? And from that point on, I was looking for another test of this longer 4-day trend. And I think we did see this trend test. It wasn't necessarily here. This was very close though. As the price began to consolidate from that bounce, the implied volatility dropped. And I did buy some puts. And what I learned today, and this is gonna sound obvious once I say it, but I learned that when the consolidation starts, but you think the price will drop, it makes sense to buy in the money puts. And in the money puts will continue to appreciate as the price drops despite the implied volatility dropping. Because the implied volatility is affecting the extrinsic value of an options contract, not the intrinsic. And so as the implied volatility drops, out of the money puts will lose value with the implied volatility. So I learned that today, and it seems like an obvious thing, of course, but it's gonna save me a lot of money. It's gonna help me make money too, and help me continue to day trade even once these big moves are over. Because once these big moves play out and that implied volatility starts to drop, as a volatility trader, I have a hard time making money. So this is gonna help. What I see in this, I saw a symmetrical triangle start to form. And this was formed by a downtrend and this line here, which isn't really a trend line. It's a pattern though. It's a pennant. This occur all over the place during consolidation. When the price did move out and break down, there was a longer trend set, a longer downtrend, and this was a pretty big cue that this big move, this bounce off of that 2080 level was over. And this is a very big deal. This is what I was saying earlier about the bears having an opportunity to trap that upward momentum. This is a huge signal. The price is not going higher. It's not. As it climbed up from that second dip, the price got very close to that 4-day trend and then turned around, eventually forming another pennant and breaking down right before the close, and ultimately closing below yesterday's close as well, which is bearish, very bearish. We saw a lower low today. I'll take a look at the 1-day chart as well. I think that tomorrow we can continue this downtrend. I really do. Volkowski does have some comments about stops or breaks in the vertical rundown. He calls them flags. You know, he says price can pause along the vertical run, occasionally or multiple times. This pause, which he calls flags regardless of the shape, he's just saying, hey, this is a region of consolidation in the larger move. He says it happens only 6% of the time, and I don't think we really paused because we did set a lower low today. Although it was on a tail, this is an incredible level that was being tested. I don't think that we've stopped. I think that this was just a little blip, and that we can continue to see this downtrend continue tomorrow, and maybe tomorrow we find the bottom. It just depends. Monday morning is going to be a big deal. When the weekly trades are made, we'll see how that weekly candle shaped up and what the continuation may be from that point. So yeah, I think we're still going to keep falling down. It's not over, not yet. Now I'm going to back out to the 1-day chart like I said I would, and we'll have a look at this candle. Defaults and enhance. Oof. Yes, and you can see I have a new pattern here in cyan, a descending triangle. That second touch point forming the bottom trend line, that horizontal trend line, and these minor highs forming these peaks of the upper trend line. 1, 2, 3, 4, 5. It's a complete pattern, it really is. I don't expect to stay in the pattern for very long, I don't. We could break out of this, and maybe we even pull back up before we go lower, but I think that we have at least one more day in this vertical rundown. And it wouldn't surprise me to reach this level here, which was formed by a gap in the run up way back here. This little gap here. This little gap could still fill and could still act as support, and I have a price target down there generated from that broadening descending wedge, which I will show briefly. I cover it in almost every video. Here it is. And this drop is ensuing, and you can see that. This is a pretty big tail, right? It could be a bottom, but I'm not calling it a bottom, I'm not. Simply because we have an increased volume trend. Look at this volume, this is nuts. It's like the bears are accumulating volume here. This is crazy. Today was actually above that 30-period average, and that's a very big deal. We did see the implied volatility drop just a little bit, and that's okay. And this is probably because we saw the price close in the upper third or upper half of this candle, and that overlaps with the prior day's trading range. That said, I think that there isn't a lot of support from here on out. To have the price move through this area so deliberately is so ominous. And look at the bodies of these candles. Not a lot of overlap in the bodies. Even here, the bodies don't overlap all that much. Now, this isn't a doji and this isn't a hammer either. It's really just, it's almost like a spinning top. I don't know exactly how to think of it, but it doesn't certainly signal bullish reversal, not yet, at least not to me. The RSI did drop today, of course, it was a red day, although it did not pierce through that oversold level at 30, which is interesting to me. To see the implied volatility drop and the RSI slow down, This tells me that the bulls could push higher from here, but as I was saying, because that bounce happened intraday and the bears captured that bounce momentum, I don't think that's likely. I think what's more likely is just to see another continued drop. And then once the RSI is in the oversold region, it may turn around, and then the bullish reversal may occur. And in the vertical rundown, you can see this on the right side of the screen, there is a likelihood, it's a high likelihood, 81%, of the price retracing 50%, and I'm looking forward to that bounce as well. That'll be great. I love the volatility. It's a great way for me to trade options because I'm an options trader. That's what I do. So that's where I'm at with AMC. It's just a continuation, and I want to cover a few other stocks here really quickly. So I'm gonna shrink that guy down, and I want to talk about American Eagle next because I was buying puts on AMC and I didn't check the symbol before I made a purchase, and I actually bought a few puts on American Eagle, which I didn't mean to, which is kind of funny, right? I know, right? Like, oh, I mean, they both start with A, and they're about the same price, so I didn't notice, and I was just like, buy. Okay, so what I see in American Eagle is a downtrend that broke, and then a corrective wave begin. And the price did break out, test, and then close below it. And there's some appreciable volume here at that close, which is good because I bought the $24 put here. So to see the close just above $24 brings me some solace. Like, yeah, it was a mistake, but at least it wasn't that bad of a mistake. I ended up holding on to the contract. This is a 15-minute. Let's go auto zoom. And this is what I see in AMC. I saw a descending triangle break out, and then some ascending scallops that formed this nice channel. A couple of triangles here, and then boom, big dump. And I haven't done much analysis from that point, but this does look like a nice rounding bottom just at a glance. And it looks like the upper lip of that bottoming pattern was not passed. In fact, it looks like there was a handle here from that rounding bottom, and then the price dumped. Let me go ahead and draw what I'm seeing. So I don't have a curved line tool. I wish I did. I might start downloading some stuff for my, and by stuff I mean custom tools, for my Thinkorswim platform so I can better show these things. There's the bottom, and here's the handle, not to be confused with the flag. And you can see that the price dumped out of that handle today and then came back up, tested, and closed below it. So this is quite bearish. The RSI was in the oversold region and was coming up, but I think that is going to be short-lived. You can see that the RSI has turned down below 50, back down towards the oversold region, and I think we're going to see another implied volatility spike and another drop. Maybe going in for a double bottom. That makes sense. I wouldn't be surprised to see the price drop to a similar level, somewhere in the low or the high 23s. At which point I'd cut the put loose and then watch. I'm not ready to be in a position in American Eagle Outfitters yet. I haven't studied the chart all that much since I last traded it, which was actually quite a while ago, which was back here. So that's what I have for American Eagle. I'm gonna go ahead and reduce this sell and then blow up. I think this is Gemprex? Yeah, Gemprex. So here we go. Gemprex caught my attention because of this massive rise in its price a few days ago. Look at this, it just goes nuts from the low $1 area all the way up to $3.62. This might remind you of what AMC looked like before the January run. These big runs at low price levels are very attractive to me. This red line is a downtrend, and I've been watching the price consolidate here, and it's formed this pennant sort of in a falling wedge shape. And the price did close above that pennant and continued to move higher. And I held on. I didn't sell. I didn't take profits. I just held. And I did see this topping pattern form. It looks kind of like a well, it has the semblance of a head and shoulders top. But again, on the 1 minute chart, I don't look for these sorts of chart patterns. I'll call it a topping pattern because that's what it looks like. And that's all. Now I'm going to turn on my 1 minute drawings here, which apparently are blank, which is terrible. It means that I'll have to redraw everything eventually. So, okay, the 15-minute chart, that's where I did it. So these yellow lines, this shows the pennant, that falling wedge-shaped pennant, and how the price broke out above it, came down. This is called a throw back, when the price breaks out and then comes back down to the pattern. It did break out and then push up and off of that 61.8% retracement level. There was a downtrend here that was broken and the price continues to rise, and towards the end of the day, we saw this upward price trend break and the price fall into the close. And now this downtrend will be what I'm watching next. I'm gonna go ahead and duplicate this one and just drag it over. And yeah, the slope is almost the same. So tomorrow I'm looking for a price move above this line to confirm a move further higher. I do like to see the price closing above that 61.8% retracement level. That is a good indicator that the price may continue to rise. Zooming out, let's have a look, see what we see. Yeah, that's not bad. That's not bad at all. The price, as long as the price is staying above the low back here, I'm going to continue to hold. I think that this could continue to move higher. It just depends on the follow through. There was an incredible amount of volume. The float for this stock is like 48 million, and there was something like 500 million shares traded on the day that this price rose. So that was crazy. To continue to see volume at these levels is good. I mean, it's not comparable to the rise, of course, but you can still see these bars against this massive surge of volume. So this is encouraging. This is just a consolidation pattern, and it is coming into a nice bottom sort of looking shape. Okay, that looks good. I like that. Maybe we're even forming a double bottom here, and the confirmation price for that double bottom would be that peak. And rising above that peak would signal a greater move higher. I am watching the stock very closely. I do have calls here. I don't anticipate swing trading them though. I want to hold this stock until it rises back up into a more normal trading range, because it used to trade 10 plus towards $20, and then in the future exercise those calls and then write options contracts against those shares. So that's my long-term plan for Genprex. Gonna go ahead and minimize this guy and pull up Oracle. Now I did have puts on Oracle and I've closed them all out, and there's a reason for that, and that's because we did break a trend here. This one, we broke this trend, and this trend is just a multi-day trend, I believe, starting on the 5th, today being the 6th, so 2 days. And yeah, right here is where I bailed out on my puts, and I did make money on my puts, which is good. The price could continue to fall, and I say that because the close was below the upward trend here, the corrective trend. In fact, this might even be a measured move down setup forming. I'm gonna zoom out a little bit. I haven't spent a whole lot of time looking at this chart, but yeah, we did have this inverted dead cat bounce. The price jumped up and then bam, it fell lower, and now we find ourselves consolidating way down here. And yeah, this doesn't look bullish. It doesn't look bullish, and in fact, the measured move down would be, I mean, where would it even start? This is this is huge, but this does look like a 1, 2, and then a third wave is coming down. That makes sense, and then perhaps the corrective phase will be much taller and might even come back up to this level at some point, but I do anticipate a more deeper, steeper drop until a bounce is found. I think at the price target would make sense. Let me show where that would be. I believe it's at that's a retracement. I think it's at 79.76 is what I thought I said. It's on the daily, I believe. I'm gonna zoom out. And this will be a little candid. I don't want to edit much. Yeah, so there you go. Today was another close below that pattern, confirming that the drop is impending. I really think we could see this, maybe even one day, just a sharp sell-off. And then maybe a bounce. And this bounce might form a measured move down from the top being way up here. So if I were to do that, let's see here. From down here, oh, that's backwards. Let me go this way. Right. And this is what I'm thinking, is the price will continue to drop down, and then it's going to bounce up and approach one of those retracement levels at around $87 to $89 before moving even further down. That's the bearish scenario for Oracle. Of course, it could reach this bottom, pull back up into this pattern, and break out, forming a pullback. That's perfectly possible, but at the moment, I'm bearish. I'm bearish on a lot of things right now. That's just the way it looks to me. Let's see here. I'm gonna go ahead and shrink this back down, and I think that is all the stocks I wanted to cover today. So, again, I don't think the fall in AMC is over quite yet. I think we have at least one more red day, and if we do see a drop below that $20.80 level, I would expect a drop to 18 to meet a price target. And from there, it could be free fall. It's really hard to say. It just is in the air. And it's a very volatile situation. So I'm playing it day by day, moment by moment, and that's what I got.